I'm Clifford Bennett from Herston Economics, and what another fabulous day in financial markets it is. I'm going to, yes, I am going to be bullish yet again, but we're right, it is a bull market. But first of all, I'll look at a couple of things that I haven't quite got right recently. One is gold. I knew that, and I suggested that there would be a bit of a pullback in gold, as people who had bought gold last year on all the fictitious nonsense, seriously, I joked and laughed at it all year long. There was never going to be a bubble burst in China, there was never going to be a disintegration or slowing of Europe, and there was never going to be a double dip recession in the United States. I said that all last year, constantly said buy. Now, a lot of the people who were saying sell because of that, I don't know what novels they were reading that out of, but anyway, they were sending that out to their clients. A lot of people bought gold based on fear last year. So the people who got it wrong last year, buying gold on the basis of fear, they're now the people selling out, so they're going to sell gold, and they're quite large players. You know, we're talking some of the big US hedge funds. They've been getting gold wrong for the last 2 years. George Soros said gold was a bubble at about $900 an ounce. So those guys have been getting it wrong for quite a while. But they're now again saying, oh, well, it looks like things are better than we thought, so we better sell gold. And that's going to go on probably for several days, if not a couple of weeks. The reality is you buy gold for bullish reasons, for good reasons. I said that all last year as well. You buy gold because the two most populous countries on earth are the two countries that value gold more than anyone else. And they're also the two countries that are having the greatest, hugest increase in wealth the world has ever seen, and that's China and India. So the demand for gold for cultural reasons is going to continue to skyrocket. We're having synchronized industrial production, as I've discussed before, on all three continents. The industrial demand for gold is going to go through the roof as well. So gold's a fabulous buy on this dip. Just let its dip run a little bit. Oil, yes, you know, the Saudis can produce a little bit more oil. It's going to cause a little bit of downside for a day or two in oil, but still oil's a great buy as well. It's a particularly finite resource. There's different qualities of oil from different locations. It's a more complex picture, but certainly all the cars, buses and trucks that China and India are going to put on the roads this year are really going to hit that market quite hard. The demand for oil is going to go through the roof as well. So just cautious in the short term on those two, but we're still absolutely bullish everything. We're bullish everything except the US dollar. US dollar maintains its steady decline. Euro's rallying as we said it would, 136, it's going 139, 145, 156 this year. Australian dollars spent enough time hesitating here around parity. It's about to take off as well. I've said that before, and then we've had a pullback. I still think, though, we've been working this consolidation range long enough now. The Australian dollar, you know, our forecast since 2008 for this particular year, 2011, has been 1.08. Just quickly on equity markets, haven't spent much time on that today. The dominant risk in equity markets is an acceleration to the upside. Don't be fooled here. Get over it. Don't hesitate. We said buy these pullbacks for good reason. The global outlook is like the world has never seen before. It's going to get better and better. Equity markets have still got priced into them all those three things: China bubble, European disintegration, double dip in the US. They've got that priced in. That means the upside, they haven't even begun to catch up to the good reality that's out there. And we know that markets overshoot. We won't be overshooting until 2013. The equity markets, particularly US, European, Australian, Asian, have got to all go through the roof. So don't hesitate to buy, because the dominant risk is upward acceleration. And that's probably it from me, but it all looks fine for another great trading day today. And I just can't emphasize enough that these markets are going a lot higher. Thank you.